is that every time we fade into these level 2 breaks, if you get it wrong, you've got to buy it back. You've got to buy it back and go with the trade again. And that stops you being that guy. It stops you being that guy. It stops you being that guy. It stops you being that guy that tries to sell and stop out and 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 sell and stop out. It stops you being that guy, and it allows you to learn a lot about markets. It allows you to learn a lot more about how the markets behave and how the markets develop, and it just stops you becoming that bad fader at the top edge of every single move that moves. And it's the reason why we mentioned before that if you get stopped out basically on a level 2 on a squeeze at a break even, just pop the reversal in. I'm not saying that as a longer term strategy that that's what you should be doing. As an early strategy in learning about the markets, you should try and not be the guy that has to keep fading top edges. But obviously, when you start adding the likes of alpha to it, you can actually become more sensible about it. You know, I mean, if you add alpha to a trade, the best thing you can obviously do is you can start seeing when alpha's gone against you anyway. The best squeezes, you'll notice, Andy, in due course will happen like this. Let me just diagram an example of what a great squeeze usually looks like so that you know the ones to reverse, okay? So let's assume the price has been going up nicely and you're not trying to fade it just yet. And then you get into a top edge and all of a sudden your idea of value changes. What the hell is that red for? Your idea of value changes. So your idea of value driving higher, and then your idea of value starts to change into the top edge, and you start saying, right, I am going to sell a level 2. And the price comes up, you get a level 2, you get short, the price comes down, and it doubles back, and you say, should I squeeze that? The answer is no, you shouldn't squeeze it. You should not be squeezing that trade. In the early stages of trading, you obviously, yes, we're trying to encourage you to go after the liquidity at the high price, but that's a scalp trade. That's a scalp trade, right? So one of the things you look at is you get that break higher and then it comes back down and you say, right, that's my fade. Yeah, that's okay. But when it goes back up, what are you going to do? You're going to squeeze it. Well, in the early stages of trading, the answer is yes, you will. You try and get that next liquidity level. And it teaches you about liquidity. It teaches you about running after the stops. Now, the best actual squeeze trade is a situation that's setting up like this. And when the price drops down, the best squeeze trade takes place when this value line starts going back up against you. Because what's going to happen is the commercials will stop selling top edges and they'll pull the price away temporarily, even possibly forever if the value keeps developing. They'll just pull the price away. Now, obviously, if that's the bottom edge and that's the top edge, what's going to happen is the commercial is going to pull their sell away up to this price, even when the value is still quite minor. And because of that, this becomes a brilliant squeezable opportunity, this one. You know, when you can get into that trade there now as a squeeze, even though the macro value is still against you, this is going to give you probably a good clean, sharp break higher through that short-term phase. And because the commercials are not going to be selling against that, there's a lot of retail and prop type traders, locals, who have all been selling into this, expecting the commercial to come back in at that price, suddenly realize the commercial isn't coming back in at that price. And because of that, it springs a lot of stops here, which pushes that price that extra bit further up towards another new commercial sell level. So the answer is, you know, depending upon where you are with your trading, obviously if the value is going up, you should really only be buying into the squeeze trade here, or the spring trade if you get that level 2 pullback trade. So there's different points when you say level 2s are the best trades on the planet. The best trade on the planet is a level 2 pullback against a trend that's still developing in the marketplace. That pullback there, that's the best trade. This is the best squeeze trade here, because getting into that trade picks up the stops at this liquidity level, picks up the stops at this liquidity, and obviously assuming the value keeps going bullish, that becomes the best buy trade for the squeeze through the top edge. But that's not reversing obviously a sell trade at that stage, because you were never in a sell trade at that stage. But obviously, the best squeezes when you've been in a sell trade is when the short-term value turns back against you, and that's going to put a lot of prop and a lot of floor traders under serious problems because they've got tight stops, whereas the commercial doesn't. The commercial's just got a hedge trade against that red line, so they're not bothered about the red line going higher. So they're quite happy to let the price go up to the next leg higher at that stage. Make sense? The thing that most people make the biggest mistake at is selling and trying to fade the very first high that they see. This is why we always say that you should maybe try and count to three, or at least try and count to two, for God's sake. So, for example, trying to sell that top edge when it's the first real top edge breakout that has been visible from the market value dropping. Because this is usually suicide here, because everybody tries to get that sell, and when it starts selling, all the kind of guys that think they've missed the highs, they all sell at these low prices. They're usually cannon fodder. Usually this is a cannon fodder trade, guys, and you just run over them. Oil was a good example of that at the top edge there. Now, I did sell the top edge, but at least I know what I'm doing, right? I did sell the top edge at the on that big break higher, but they still came after the stops. They still pushed the top edge higher in oil. So after the cash open happened here, this is always going to be the cannon fodder trade here, but I'm selling on an uptick, not on the downtick. This is the cannon fodder trade here. This is where the idiots appear here. These guys don't deserve to exist in the same space. These are oxygen thieves, these guys. So when these oxygen thieves turn up at that price, one of the things that you've got to realize that there's a very high probability that they're at least going to run the oxygen thieves off the trade, right? And you're just going to try and run up into the stops to get that business. And that's exactly what happens. You get that business, and then that's you counting to two at that stage. That's your brilliant top edge opportunity to work into that sell trade. And now you've got a nice break to the downside. Now you've got a nice break to the downside at that point. And, and obviously now the idea is to try and get back down to that baseline price that we'd started to sell at way back yonder when. So if we can get back to that price, that could open up the door now to the next big fade, the next big phase of selling coming in oil as we move into the US cash open. So that's the deal so far, guys. Sell side 51.20s trading 53.20s trading 53s for 20 ticks. If you're still with me on a deal, we did tell you it was going to do this, so you shouldn't have been in any danger. We're making some nice monies, guys. Making some nice monies.